Well, what is going on, guys, and welcome into the video. You guys know I've been a buyer in this market. I just cannot pass up steal deals like we've been seeing. I mean, it's been ridiculous, and some have already paid off with 20%, 40%, and even 60% moves to the upside so far. But unfortunately, there are many stocks out there that will go to zero, and it can be tricky to spot those landmines from the real opportunities. Just because a stock is 90% off from its all-time high does not mean it's a steal deal. I mean, for every Amazon that was 90% off from its all-time highs and an incredible steal deal after the tech bubble popped, there were hundreds of stocks that went belly up in the wake of that mess. So I will tell you which ones I think are the most likely to not be steal deal like Amazon, but more of a pets.com type scenario. And just hitting that like button is all that I ask for in exchange for an honest take on this, and I'm not a hype channel. Anytime I say something against a stock everyone seems to love, regardless of how true the take is, the video just gets killed, and the only way to combat that is for you guys to like the video. Unless you want to be hyped up and then be in a situation like some are now with money being gone forever. And honestly, I feel bad for many folks out there because they are already seeing the real effects of a bankruptcy in a company that was hyped up and, basically said it was going to the moon. And this is just the beginning, guys. There will be more coming, so that is why I'm putting out this video. Now, let me be very clear about this one point. Many of these will not actually go to zero. I mean, some will, don't get me wrong, but others may get bought out or acquired, and yet others may get bailed out altogether. But no matter how this falls out in the end, these are investments that I prefer to not have in my portfolio at all. These opinions come from living through and investing during the tech bubble and the financial crisis all the way up until today. I mean, I basically lived it and watched it daily during those crashes, so that is kind of where I'm coming from, and I just wanted you guys to know that. And you also need to know this is all actually quite normal and needed, and more importantly, it's actually critical to the proper function in the stock market over the long term. Anytime we come into a recession or high inflation or any other macroeconomic turmoil, there will be casualties in the stock market. That is just a fact of investing. But much like recessions are part of the business cycle, so too are companies getting swallowed up and going to zero in a downturn. And this all has to happen to weed out the bad companies that need to die in some cases, and it allows good companies that take care of their finances and are prepared for this to show what they're made of and come out stronger on the other end, either because there's less competition or because they bought up the competition for pennies on the dollar. And this is also why I pushed so hard against all the hype penny stocks, aside from the fact that it was just honestly getting ridiculous out there. But there was going to be a day of reckoning, and I knew it was coming, and it's finally here. And let's actually start right there with hype penny stocks and pre-revenue companies. I really hope that if you bought any of these pre-revenue penny stocks, you made sure they had tons of cash on the balance sheet, or at least they raised it from investors that bought into it during the hype run up. And I'm sorry about that if that was you, but if they did not, they will go under. Venture capital is going to dry up, and lending to those type of companies will also dry up as well. It doesn't matter if their product may cure cancer one day in the future with this amazing tech that actually hasn't been approved yet. It doesn't matter. Sorry, a slick marketing showcase or industry day with lots of experts and doctors is simply a marketing ploy in the end. No revenue and no cash basically means bankruptcy. And if the tech is actually game-changing or will actually be cancer-solving, then it will get bought out. Otherwise, those companies are going to go under. And this applies not just to hype penny stocks, but to all the pre-revenue stocks as well. Unfortunately, sometimes timing is everything when starting a business, and there are great companies out there that won't make it because the funding will dry up and they won't have the cash to survive. If they had started 5 years ago and were able to bring the product to market and generate revenue, they may have been able to survive and then thrive on the back end of all this. But now they just may not have the time or the money to keep the doors open to get there. Heavy debt-laden companies that are not actually profitable are absolutely at risk as well. Kind of think the airlines or even legacy auto can fit into this category. Now, I agree that the airlines will get bailed out and won't go bankrupt because the federal government will consider them vital to the proper function of the economy, and there honestly is no other alternative. But that doesn't mean their balance sheets will improve any at all. It'll probably actually look worse, and the stock will suffer because of it. I would also expect some consolidation as well, with the smaller airlines getting swallowed up by the bigger ones. I also expect the same for legacy auto as well. We may actually see some consolidation in some form of, lifeline handed out by the federal government if it starts to get ugly out there. It's honestly why I don't think Tesla will just eliminate all the competition like so many out there keep saying. The deck is basically stacked against them, and the government will provide the lifelines necessary to keep most open, just like they did during the financial crisis. But unfortunately, the same cannot be said about crypto brokers and crap coins and all kinds of other stuff like that. Now, let me be very clear. I am not a crypto hater, and I do believe the blockchain will be the future of money, and crypto will play a part along with some of the other brokerages. But I also thought many brokerages were going bankrupt before Voyager and others followed for it and went completely under. I actually started working on this video last week and already had this bullet point because anytime someone is offering just a ridiculous return on your money just to keep it with them, it screams a massive red flag to me, and during a downturn, it's going to unravel. I mean, seriously, I would consider a 7% return to be skeptical at best, much less 20% or 30% or whatever the heck was being offered by all those crypto brokerages. I think everything got way too far out of control all the way around, from leverage to transparency to reporting, so there's going to be massive regulation coming for crypto. And that regulation alone will kill many of these pretenders that are not profitable now, much less when the regulation actually comes down. I think you will see the brokers and the coins that are worth anything at all get swallowed up into the bigger brokerages like Coinbase, and many of the smaller ones will honestly just disappear. Expect to see more and more of this over the coming months. And also expect to see the same thing among the pandemic winners that are now losers as well. There were many stocks that received a lot of hype and run during the pandemic. Some were great businesses like Apple's and the Amazons and others like that who can sustain the growth. I mean, maybe not at that pace they saw during the pandemic, but there's no doubt in my mind that Apple and Amazon will grow the revenue and profits for many years into the future. Unfortunately, that cannot be said for many of the other businesses, and these honestly were easy to spot, but yet they still picked up traction as a great business outside the pandemic based on the pandemic numbers. And let's use Peloton as an example to kind of illustrate this. During normal times when you can get out and you are not flush with free money from the government and nothing to spend it on, and you have the ability to go to the gym and get out and exercise and be on the streets in general, the market is really small for people who want to pay for a $1,000 plus bike or whatever the heck that thing cost. And then you got to look at, out of that crowd, how many are likely to pay the $30 a month subscription fees, which was the future driver of all the revenue growth models out there for those stocks during that time. To me, that just spelled a niche product for a niche audience, and I know I said that wrong, I'm sorry, but anyways, it's a niche product for a niche audience with no viable growth prospects in the future to justify a $100 billion valuation, much less grow that valuation into the future. I mean, Apple, I can completely see it, but stocks like Peloton and others, it never made sense to do anything other than trade the hype run on those stocks. And I don't see another run happening for those type stocks in the future, and a bankruptcy or a buyout is much closer to the reality of what will happen with those stocks. The good news is that the time we are in right now comes along once every decade or so, and it's where fortunes are made. You just gotta avoid these landmines along the way. And do you want direct access to me to ask about anything, or want to learn how to value a stock, spot misses like these stocks, and see my watch list with price targets and my buy and sell alerts in real time and a ton more? Just make sure you check out the pinned comment and at least give the Market Insiders private group a shot. And click this video here if you want to see what I'm selling in this market, and click this video here if you want to know exactly how I plan to make big money in this market. So thanks for watching, and we'll see you in the next one.